What's going on, guys? Chad here. Just want to give a quick update on the markets. I think we live in a quite interesting time, and by no means am I an expert on anything. I just kind of have been forced to watch the markets for the last 20 years, trying to build this house and being off grid, and I had to pay attention to a lot of different things. It's been challenging to say the least, just funding this building and trying to move money around and things like that. And I've been in the gold market for 20 years, and there's been a handful of people that have helped me make decisions that I follow. And one of them is James Dines. I'm going to share another one a little bit later, but James Dines has an interesting perspective on markets. He's a contrarian that has identified almost every super trend like a year ahead of time. So he gets his clients and followers in before these huge, like 1,000% gains. He has passed away like 2 years ago, but I want to share something from his newsletters that I think is extremely valuable in the coming year and in every single year, basically, because he puts out an annual report. So he puts out all these newsletters. Just to give you a few examples, I think you got people into Bitcoin below 1,000, the marijuana boom, the rare earth boom, uh, technology boom, everything that he has gotten people into. He's almost always been right, at least like 70% of the time, and 70% of the time is an extremely good track record. And he's made his clients or followers, 1,000% gains, recommended gold at $35 an ounce. Just tremendous information. And now that he's passed away, I just want to share a few things from his annual report. I'm not going to like go into specific like copyright stuff, but I want to just share with you an interesting perspective from like January and the first part of the year. So in James Dine's newsletter, he reported that 76% of the time, if the stock market goes up in January and stays up, 76% of the time, the end of the by the end of the year, the stock market remains up. Also, if the low of the previous December gets broken within that first quarter, the chances of the stock market going down is a lot higher. Now, if the January is down and the December low gets broken, the chances of it I think it's like a 60% probability or a little higher than that. But I'm going to go into some things from an MSA standpoint, which I'll mention in a little bit, that we can kind of like look at some markets and see what's happening in that first quarter, because there are momentum triggers that are very close to being hit now. And we also have an interesting situation going on right now where the December low wouldn't be hard at all to break. Because if you look at the stock market, the December low as it stands right now isn't much below where it's at. Like currently trading has, I mean, December has kind of been like a sideways month to a little bit up. So also the presidential election also has to do with his predictions. I think like the move like in the third and fourth year are like 2.5 times bigger than the first and second year of the presidential election. And also odd years have to do, I think odd years for whatever reason make these predictions more accurate for some reason. Now we're in a situation where we've had a President Trump, then Biden, then Trump again. So we don't even have, this is quite unique. And I don't know if these numbers would be thrown off because of that. But in any event, we are probably in a super bubble right now that I believe personally that whenever this bubble bursts, it's going to be irreparable from the downside. And one of the reasons is because the bond market's broken and we've had a taste of what kind of inflation we can experience when we bail things out over and over and over again. And if Trump does what he promises, there's almost guaranteed, in my personal opinion, that there's going to be a collapse if he lets capitalism work. I mean, we haven't had capitalism for a long time, and we've just literally just bailed people out for making gobs and gobs of mistakes. And if we let capitalism work, obviously, bankruptcies have to happen, restructuring. And if you eliminate that much of the government, which I don't know if they're going to do that or not, if they fulfill those promises, that's going to be a lot of long term, it's going to be outstanding, in my opinion. But short term, it could cause a major collapse, which everyone would end up blaming on the president. So what we're looking for here is, here's the December low, and the market's been like straight up over the last several years. I mean, if you look at the 2009 low, I think the Nasdaq has gone up like 16-fold. So that's, and our economy has not grown that much. It's a bubble. And the advanced decline line, interestingly enough, is not has not risen from this new move in the market. So that's an early warning sign. Now, another person that I like to mention is MSA, Momentum Structural Analysis, where his name is Michael Oliver, and if you email him, he'll give you a free sample, which is very generous of him. And they put out like these weekly reports, and they almost email you like 3 reports a week, something like that. A lot of times it's 2 or 3 reports a week, which the information in there is outstanding. He has a system where he analyzes momentum and price. Basically, he puts price up here and momentum down here. And if they're not agreeing with each other, there's something rotten internally in the system. And he's been pointing out for several months that the internals of the market are deteriorating, but there's certain trigger numbers that need to be hit before it becomes a problem, which is, to me, is very unique and rare, because he has these specific numbers, even if the market's going up, that can get you out of the market before, way before, a trend changes. And then in the bottoms, he's also, for example, he called the bottom low in gold in 2015. I think it went to $1,000 an ounce, and he called the bottom of that. And in 2013, he called the top in gold when it was, moving up into around 1900 an ounce, and fell from 1900 down to 1,000. So this guy is extremely accurate. He's got his track record is outstanding. I bet he's right more than 70% of the time, which is extremely rare. So he's got levels to watch out for. So if we break the January, if we go down in January and we break the December low by the first quarter, that would spell something that's crazy, a top, some kind of crash coming in the markets, and it would give an early warning sign, an indicator that to get out of the market. And you can also profit from these collapses to trade on the other side of it, short it, buy the VIX. There's things that you can do to make money on the downside, or even if you get out, it's just he can help save a tremendous amount of money. Because, like I said, I don't think this next bubble is going to be repaired. Every other one has been, so everybody's been bailed out. This one is probably the end game, and you're going to want to subscribe to these people. Michael Oliver, MSA, Dine's Letter, you can't anymore, but these people can help get you out of the market when the time comes. All right, guys, thanks.